All right, friends, it's been a while since I did my last full portfolio update. So that's why I thought in this video, I'm going to give you a full deep dive into all my stocks, ETFs, and crypto holdings. And of course, this is not to boast or anything, but instead inspire you to maybe really start taking investing serious. Of course, to some my portfolio might seem very little. To others who are just beginning, it might seem like a lot. But ultimately, it's not about benchmarking yourself to other people's portfolio, but taking your own money and taking investing serious and building and growing it over time, compounding it, and you will see amazing success out of it. Right, so let's start off with stocks and ETFs, which I keep on interactive brokers and trading 212. But first off, let's look at interactive brokers. So I like to diversify across different brokers because, you never know what happens, right? Even though, those are really trusted brokers, but I just like to diversify, try different things. So, mostly I invest with those two. I use other ones as well, but those two are my two biggest holdings where I have most of my portfolio. So you can see I have a bit of cash sitting over here waiting to be invested. So I'll do that very soon. But right now, my total portfolio holding over here on interactive brokers, that's in dollars, will be $54,700. And I keep it specifically in dollars, even though technically, I'm from Europe. But right now I have moved to Dubai as well. So I live between Dubai and Europe, and most of my income right now is in dollars. And I just think it's a stronger currency long term. And also my ETFs, I invest in dollars. So that's why it makes sense for me not to have that, exchange rate fluctuation being factored in. Overall, I'm really happy with my rate of return so far. When you can see over the 1 year period, of course, the S&P 500 has seen amazing gains in the last few months, driven by all these tech stocks. So definitely really happy with this performance. So then let's go into my portfolio. Just click in this over here. And I really reduced a lot of my holdings. I used to have a lot of individual stocks, mostly dividend stocks. And not so long ago, I made a video why I sold a lot of those because, when I really looked at them quite openly, I actually saw that a lot of, in fact, most of my dividend shares underperformed. So while it's amazing to get that dividend income paid to you passively, right? Ultimately, my money was not really maximized. And that's why I had a critical look at it and decided that eventually my money is better off invested into the S&P 500 than some individual dividend shares, which I won't even know how they will do 10, 20 years from now, right? So that's why you can see, if you watch any of my previous updates, way less stocks that I'm holding right now than I used to. This is sorted by market values. So my biggest holding is right now still, you can see those two different ETFs. These are S&P 500 ETFs. I used to start with the VUSA, which is from Vanguard, S&P 500, based in euros in Amsterdam. And that's what I started with. But later on, actually, I added also the State Street S&P 500. That's listed in London and in US dollars. And now I only invest into that. And I haven't really decided yet to sell the VUSA, but eventually probably it would make sense to sell it and then switch everything into the SPY5. So basically they're tracking the same index as both S&P 500. The State Street, actually the expense ratio is even less at 0.03% versus 0.07%. Both are extremely low and both are great options. I just think less expenses might potentially be more profits for me. We'll see how that turns out, but I'm really happy with that one. And of course, you can see here the gains so far, 3,100 in the plus and 481 in a very little period. And the market value I invested was not that much. So really, I'm really happy with this. This for me is really set it and forget it investing. Passively, I invest every single week. Right now, I took a little bit of a break because I had a lot of cash expenses. And I'm a believer that firstly, I want to restore my emergency fund and then I'll continue investing into that. Then I have a couple of individual dividend shares left over here that you can see. My biggest one of all of them is Realty Income. The ticker symbol is O. It's a real estate investment trust based in the US. They pay me a monthly dividend, which is really nice. But overall, you can see actually I'm down quite a bit, $409, as you can see over here. At the same time, I'm also getting a monthly dividend. As I said, right now, it's around 5%. So really quite juicy. 5% is for the year, of course. So that's why I'm holding on to that. I know once the interest rates will come down, I'm very confident that actually the price of that stock will go up because obviously they will be able to acquire more real estate. It's cheaper for them to borrow money. So I'm sure all my 3 real estate investment trust holdings will do well. So that's why for the time being, I'm holding on to them. Then I have Pfizer, a company I was really bullish on in the long term. I bought stocks worth $4,200. Now it's only worth $3,500. So that's probably my worst investment so far, down $623. But again, honestly, I'm not too worried about it. People always think, oh, you lost money, Kai. Well, actually, I didn't lose money. It's just a theoretical value. If I was to sell it now to materialize the loss because I needed the money, yes, then I lost the money. But otherwise, if I'm just holding on to it until they recover, which I really can't see that they don't recover, at least back to the level they used to be, and then I will potentially sell them. Most likely I will sell them and then bring it in to the S&P 500. Some people say, why don't you sell now and just take the loss and invest it all? But ultimately, I think they will have for a time a higher growth than the S&P 500. That's why I'm betting on it. The value for me is not really that huge, so that's why I'm confident that long term it will recover, and then I will definitely pull out of it and just move those funds into the S&P 500. Then I have Google, which in the past was my only non-dividend paying company, but to my surprise, they even start now paying a dividend, which is great. It's a tiny dividend, but still they pay a dividend, which is nice. And yeah, obviously in recent times, they did make a little bit of a comeback. So now I'm actually quite in the plus. You can see over here, $1,200. So I'm really happy with this. Probably I'm going to realize my profits very soon. I'm going to sell it and then shift those funds into the S&P 500. Now looking at it, I will actually do this probably next week just to get it done and move those funds into the S&P. I'm sure Google will continue to grow in the future. It's a strong company. Now they're really pushing into AI and so on, even though they have been, a little bit behind some other companies in the AI race, I would say. But yeah, ultimately it's a strong company. But as I said, I really want to consolidate into the S&P 500 because long term, I just don't see too many companies that really outperform it. Then we have Altria, another great dividend company. They pay me close to 9% annual dividend. And yeah, I mean, I used to love the company a lot because obviously 9% dividend sounds really attractive. But once again, as you can see, the total performance, I'm just about break even on $100. Yes, in the meantime, obviously I made a lot of dividends from it. But yeah, when I compare that performance to the S&P 500, you can just see here over the last 10 years, I'm looking at total return. So that factors in dividends for both of them. So the blue line is the S&P 500, which returned over a 10-year period 232%, while Altria only returned 91%. So my money in that company went half as far as it did in the S&P 500. So I'm really, in a way, losing out here how much I could have gained. And that just shows you I can do this for pretty much most dividend companies. And there were very few that really over a long 10-year period outperformed the S&P. And that's what I'm saying. I just don't think I can outsmart Wall Street. And that's why I'm really happy to consolidate a lot more into the S&P. And then we have another two real estate investment trusts, Vici and Agree Realty. Again, two companies I really used to love, especially Agree Realty. It's like the small brother of Realty Income. They have a lot of room for growth in the future. They also pay a monthly dividend, which is great. Vici owns most of Las Vegas, so really promising, right? I don't think gambling is ever going to go away. But when you look at it over here, the total performance, Agree is a smaller position, up $50. But then once again, with Vici, I'm down 232. Even though with the dividend, actually, I'm pretty much break even. But yeah, again, as I said, even those companies also underperformed the S&P 500. So same logic over here as with Realty Income. I believe once the interest rates will start dropping, hopefully they will eventually, I'm pretty sure they will increase. And once they increase, I will definitely exit out of them and use those funds to invest back into the SPY 5, the S&P 500 ETF from State Street. And lastly, we have Apple, kind of the dark horse in the AI race, right? They haven't done anything in recent times, at least they haven't communicated, but now they came out with a presentation, which I was personally quite underwhelmed with, but it seems investors liked it. And you can see, in recent times, they really went up. So I'm really happy. I was in a loss for quite a while, now up $306. Again, I have a small position in it, but I would probably also take the profit here once the market's open together with Google, sell it and move it all into the S&P 500. So my goal is really eventually in this to only have one or two lines, depending if I keep Wusa or not. Essentially, I will mostly have my S&P 500 from State Street. That's going to be my single stock or ETF investment that way. And yeah, for the time being, that's what I feel most comfortable with. Then we can jump over to my Trading 212 holding. You can see right now the total value is 28,000. But of course, I have a bit of cash sitting over here because right now I'm getting 4.2% interest on my euro sitting here, which is amazing. So my emergency fund, I don't keep it in my local bank account, which pays me zero. Instead, I keep it on Trading 212, a couple of other apps like Lightyear, Revolut as well. So yeah, that's really, really powerful. But in terms of investment, you can see I have also a little bit of Apple where I'm up, 137 euros. Once again, just because of recent times of the boom. So I will definitely sell that next week as well to consolidate into the S&P 500. And then I also buy the S&P 500, the same I showed you before on Interactive Brokers. I also buy that over here on Trading 212. The cool thing is actually I basically get it without any commission. That's even better than buying it on Interactive Brokers. Here I can buy it without any commission. So I really love that. And yeah, you can see obviously up 400 euros. I invested not so long ago, so really healthy plus over there and really happy with this. And yeah, definitely want to buy more. And of course, when I always see these graphs, you can see the development of your portfolio. It's lovely, right? Not too long ago, I started with very little because in the beginning I had everything on Interactive Brokers and then slowly started to shift more funds over here. And nice to see the portfolio value increasing. And as I said, I will continue to invest into both of the brokers. And the good thing is both of the brokers allow also portfolio transfer. Eventually I could transfer those shares or portfolio or ETF holdings into another broker if I wanted to. So that's really cool and really powerful. And always make sure your broker allows portfolio transfer out of the broker, right? Most of the brokers allow you to transfer in, but not very many allow you to transfer out. But that's very important because you never know what happens in the future. So you want to be flexible. So before we move to my crypto holding, that's another great tool called GetQuin, where you can basically connect all your various brokers that you have and automatically, synchronize them. So you have all of your numbers in one dashboard, so to say, right? So you can see individually, I have my active brokers portfolio synced over here. I have my trading 212 portfolio synced over here. So then basically I have one aggregated dashboard where I can see, year to date, all my performance, how much I'm up, how much I'm down. So you can see your performance over here, your total net worth. You can also add other portfolios very quickly. You can add even your crypto, Coinbase, what have you. You can even have alternative assets if you wanted to, add your cash, real estate. So you can really track a lot of things that you wanted to have one dashboard for all your net worth, so to say. And then you see over here all my various positions, up or down. So it just makes things more easy. I also use it on my app. So I really enjoy it. So if you want to check it out, use my link down in the description below to give it a go. But I really recommend you, especially if you like dividend investing, you can see here how the dividends grew. I mean, look at it. Back in 2021, I earned $16 in dividends. And now, 2024, despite me already reducing a lot of the dividend stocks that I have, I'm still going to be making almost $1,400. So really, really nice. And you can see when you're going to get paid and what have you. So really enjoy the tool. So definitely have a look at it. Right, with this, we come to my crypto holding. And as you can see, that's actually the biggest part of my portfolio. Of course, apart from real estate, that's definitely the biggest part. Even bigger than my stocks and my ETFs are my crypto holdings, especially Bitcoin. As you can see, actually, I only have one crypto, and that's Bitcoin. I'm really a Bitcoin maximalist, I could say. Really, that's the asset I believe in most in crypto. I used to hold other coins as well, but mostly now Bitcoin. I will show in a second. I do trade a little bit some meme coins right now because the market is so hot. But again, mostly my money I invest into Bitcoin because long term I'm super bullish on it. I really wouldn't be surprised if one day we see prices like 500,000, 1 million. Recently, Michael Saylor, one of the smartest guys and heavy Bitcoin investor, said he would see it at 8 million one day in the future. So I'm really long-term bullish. You can see that's why my portfolio also grew a lot. Now, of course, I invested a lot in it, but then again, also I had a lot of gains from it. You can see how it developed over time. Not so long ago, it was much less, obviously, but yeah, my average cost price, I would say, is around 50,000. So at the time, I was actually late, you could say. I bought some of it at 40, some of it at 60. I even bought some of it at 70, but on average, my cost price is around $50,000. So basically, more or less, I doubled my money, which honestly, I'm really happy with. Of course, if you entered even earlier, that's great, but I'm really long-term bullish on it. As I said, I wouldn't be surprised if we see it at 250,000 or 300,000, and I wouldn't be selling it by then, right? Because I really think it's so powerful, and that's why I'm holding it for the long term. The majority of my Bitcoin, I really hold on my hardware wallet. I have it in different places. So even if somebody finds one and forces the code out of me, it won't happen. You would need a second device to approve a transaction, and that just keeps you safe. Because again, otherwise people can come into you and force the code out of you, but that's really a security hazard. So I'm really a big fan of multi-sig, that different parties, in my case I have 3 different parties, but 2 of them need to approve the transaction in case I wanted to send it from a Ledger wallet somewhere else. I really recommend you just to have that added security there in place. But yeah, overall, I'm really happy with this. Certain days I was already over 100K, so that was really nice to see one asset class over 100K. So yeah, really happy with this. Of course, usually I say I'm a conservative investor. When people see my strong Bitcoin holding, they say you're really aggressive. But at the same time, by this stage, I already consider Bitcoin less aggressive than if I would invest into a lot of the altcoins or even individual stock companies. For me, investing into Tesla, honestly, feels more risky than investing into Bitcoin. But again, obviously, that's my choice. It has to work for you. But for me, I'm really happy with this, and I'll continue to dollar cost average into Bitcoin. And usually what I do is buy my Bitcoin on Nexo. You can see I still have a little bit over here in my wallet. You can see some Bitcoin that I got, a little bit of Nexo token as well, that I just use to have a higher loyalty level with Nexo. So when I exchange money, it will be even cheaper. I get higher interest rates. I have now some USDT. I actually plan to send more of my US dollars into Nexo, change it into USDT, which is basically a stable coin. But right now, as you can see, I'm actually getting 13% interest on my US dollars, basically. So USDT is, moving 1-to-1 with the dollar. So instead of getting 5.2%, which I get with my brokers, now I'm getting 13%, per year, but paid out daily. So really nice. I'll make a separate video if you want me to. Let me know in the comments down below. I'll be happy to make that in the future. But yeah, that's basically what I do. I then buy it over here, my Bitcoin, and then send it into my Ledger hardware wallet from here. Or what else I do is also send my euros over here or dollars to exchange it into USDT and send those to another crypto exchange where I do a bit of crypto trading. So for that, I'm actually using BitGet. Really like the exchange down at the bottom over here because it has really the lowest possible fee I've seen in terms of trading. It's definitely better than Nexo. To regularly buy, I find Nexo much easier and has other benefits. If you really want to trade frequently, then I think BitGet is a great option. Others use Binance and so on. I tried a lot of them, but somehow, really like BitGet and it's one of the biggest ones out there. So you can see I have another 6.6 thousand USDT. So basically US dollars sitting over here. And yes, please don't laugh, but it's all invested into the beer coin. And honestly, please don't replicate this because it's absolutely crazy. I'm just doing it right now because I really want to try it. First of all, I think it's interesting to give it a go. And because we're really in a crypto bull market right now, a lot of crazy money is flying into it. So I thought, why not benefit from it, right? And honestly, of my total portfolio, that's less than 1% of my actual holding, right? So in that way, it really makes sense. Even if I lose it all, which of course would hurt a little bit, but my life wouldn't change. I invested in total 6,000 euros. So you can see pretty much I'm now at break even. At some stage, it was already at $16,000. So now I'm kind of regretting why I didn't sell. But at the same time, also yesterday, it was down at $4,000. So it's really a roller coaster ride. And I really don't recommend anyone to try it. But I think it's fun. I'll try it out. I traded in and out a little bit, made some profits already. And you're really learning about the community, how it all works. I'm learning a lot of new things about decentralized finance, how it all works, the sentiment trading and so on. So really interesting for me. I take it more as a learning lesson. And if I make some money in the process, great. I think there's going to be some great listings coming up. Eventually, they're going to talk about Binance having the beer coin, Coinbase. And once they list it over there, there's the assumption that more liquidity will come into it and that will boost up the price. So honestly, if it will hit for me $20,000, I will definitely sell it. So yeah, until then, I'm just going to hold it, see what happens. And hey, why not have a bit of fun trading, not investing? That's really trading. So yeah, but I enjoyed it for the time being and let's see what will be the outcome of it. Of course, the biggest part of my net worth, I would say, is tied up in real estate. My apartments in Dubai, now another one in Vilnius, Lithuania. So that's definitely the biggest part of my net worth, I would say. But apart from that, obviously you can see it's also nice. When I did the video not so long ago, I was a little bit below 100,000 and now it's over 150,000 euros already. So nice to see the progress. Of course, it always depends on how the markets are, right? If we're now entering bear markets, the crypto could go down by 50%. So could my stocks drop by 20, 30%. So there's no certainty in life, but I know that long term, if I hold on to it and continue to invest into it, that number will only grow. And that's why I continue investing because I know I'm really building my future and will benefit from compound growth. And of course, what I also didn't show you is my cash position, which probably by now is very much equal to my stocks and ETFs holding in total. So quite a big number, but I still use a lot of that to finish off our apartment in Vilnius. We have to buy a car in Dubai, finish the apartment in Dubai. So a lot of expenses still coming. So I needed that cash and I couldn't invest it, sadly. I would have, of course, liked to, but in the meantime, I was keeping it in accounts that paid me quite a bit of interest, which is good as well. And of course, let me reiterate the importance of tracking your expenses, which I do every single month. At the end of the month, I go through all my income, all my spending, and then also all my assets and investments, right? As I just shown you, I have a lot of money in different places. So I really write it down. How much do I have in my bank? How much I have in my investments, various accounts, real estate, the businesses that I have, and then track my net worth over time. And hopefully that number goes up, which it has over time, which is nice. I even track certain KPIs over here. You can add some more. So I made this template available for you free of charge. You'll find it down in the description below. And I think it can really help you to really seriously track your net worth, because otherwise it's easy to lose your oversight of what's happening, where your money is going, right? So I think it's really important. And as the saying is, if you can't measure it, you can't manage it. So really start tracking and take this serious. So of course, while I'm happy to see the number growing, I'm still below 40 and I haven't reached the 1 million net worth quite yet. I'm getting there, but still a little bit away. So I have to do a few more things to get there. Continue, of course, to grow my income. I think that's how it all starts. Work on growing your income, then you have more money to invest. But I know my goal will be to hit it before I turn 40. So hopefully I'll get there and I'll obviously document my progress along the way. I hope you found this video useful. Let me know down in the comments below any questions that you have. I'll get back to every single one of you. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.